bye, 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 bye.
I know I'm a grifter strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla Maesla and you, strong man.
Woo boy! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about Corsair. So Corsair is this PC gaming designing building company. You know, you go on their website, you buy components for your gaming PC, they mail it to you, and then you build your crap. That's basically what they do. Now, Corsair was a very, very, very popular stock on YouTube. Why? Because some big creators talked about it. Doesn't matter about the fundamentals. Doesn't matter about anything. If somebody big talks about it, the stock gets a cult freaking following. So let's go ahead real briefly, and let's watch this clip from Jeremy LaFoo. And then we're going to read the guidance from Corsair. We're going to go look at the financials, and then I'm going to do a very ghetto discounted cash flow analysis, which according to some people is illegitimate. You just buy stocks that have high revenue, my revenue. So I'm going to mute my volume. Let's go ahead and watch this.
Well, holy smokers, folks, this ain't no dang jokers. Corsair Gaming, CRSR, is going absolute beast mode here today, okay? We've got to talk about this stock. What is going on here? Things like that, okay? And there's so much we got to get into in this video here today. Now, you know me, I've been buying the stock very heavily the past several months. Huge believer in this company for a long term, okay? And I've always thought this company could end up being like $100 stock, possibly in like 5 years, okay? Well, there's been a little change here with Corsair Gaming.
So there you have it, ladies and gentlemen. Apparently Corsair is going to be a $100 stock. He's been buying it heavily, and the price that he showed after that run-up was $41. So he was probably buying in, I don't know, the 20s, 30s, and 40s. Now, let's go see what actually happened to Corsair, my horse here. So we're now in 2022. This is after all the hype bubble is deflated. Corsair Gaming to report, actually, let me check something. Okay. Corsair Gaming to report Q2 2022 financial results on August 4th. Ooh, boy. I can't wait for that day, boyo. Corsair, my horse here, is a leading global provider and innovator of high-performance gear for gamers. Blah, 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 blah. The company also announced today its preliminary unaudited revenue, I don't know how legit that's going to be, was approximately $284 million. So let's go and look at Q2 of Corsair. And by the way, look at Corsair stock now. LaFufu was like, oh, it's going to be $100 stock. When it was $41, now it's $13.85. It's the hedgies, bro. It's the hedgies. So let's go ahead and look at the quarter. So their revenue is this. Oh, my God. Oh, my God. Is that really their last year-over-year revenue? So it looks like they had revenue of $472 million. At the end of the second quarter in 2021. And now they're saying they're going to have revenue of $284 million. That is a massive decline. Let's see how much their revenue, if I'm reading this correctly, has dropped. That minus that. Oh, crap. 284 minus 472.9 divided by 472.9. So their revenue has dropped, it looks like, freaking 40% in 1 year. It's almost like Corsair was a beneficiary of the pandemic and the STEMI checks and people being locked down at home. Potentially, probably, maybe. I realized that almost instantly. And I'm not saying I'm a stock genius. I'm an index fund investor. But holy freaking crap, man. That was obvious to see. But it doesn't matter. You know, you just say a stock's going to 2x and blah, 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 blah. With preliminary unaudited adjusted EBITDA expected to be a loss. Now, adjusted EBITDA means earnings before interest, taxes, depreciation, and amortization. What does that mean? Basically, a company starts with net income, their bottom line profit, and they add back interest, which is a real expense of a business, taxes, which is a real expense of a business. Depreciation, which is recognizing capital expenditures over the useful life of those capital assets. That's a real expense. And amortization, which is intangible assets. It's the same thing as depreciation, but with intangible assets. Apparently, you can just add all that stuff back and it's fine. But even after they get rid of all those expenses, they still had a loss between 10 million to 11 million. So the real bottom line loss is probably way freaking worse, okay? This is horrible. We have already taken actions to mitigate this and make substantial changes about the quarter to reduce inventory levels. So apparently they have a bunch of inventory. I don't know if their company's management was like, oh, we sold a lot of inventory, right in the middle of the pandemic when everybody had stimmy checks and was locked down and needed computer equipment. And, I'm sure that's going to last forever. Let's buy a bunch of inventory. We are pleased to see, okay, here's some of the positive news. We are pleased to see recent upticks in activity enthusiasts looking to build gaming PCs, which use our component products, and GPU cards are now generally readily available at attractive prices. Overall, we believe the self-built gaming PC market will begin to accelerate in the second half of 2022, with the new higher-powered GPUs launching during the same period. Blah, 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 blah. So basically, this company is hot freaking trash, okay? They've been freaking wrecked in their stock price. They were a temporary beneficiary of the pandemic, and now they're getting wrecked because of it. Let's go ahead and look at some of the financials, okay? Now, what caught the attention of old Jeremy LaFufu? Well, you can see in 2018, they had revenue of $937 million. And then in 2019, they had revenue of $1.09 billion. 17% revenue growth. That's fine. That's good revenue growth. However, look what happened in 2022. Was it not obvious that the pandemic caused this? It's a computer. They make computer components, or they probably buy them and resell them. Of course, that freaking caused the massive influx of demand. But some clowns will look at this and they'll say, oh my God, the revenue's up 55%. Let's go look at their gross profit. Okay, their gross profit is their sales minus their cost of goods sold. 20%, 20%, 27%, 27%. What is their profit margin? 5%, 6%, -1%, -1.5% over those 2 years before the pandemic. This is an unprofitable company that was temporarily boosted by the pandemic. Obvious to frickin' see. Let's go look at share dilution. Of course, they're issuing freaking shares. So not only are they unprofitable, they're issuing shares. Let's go look at their cash flow. Okay, at least they have positive operating cash flow. But you can see in 2021, they almost dropped down to negative operating cash flow. Let's look. And lo and behold, look at this. Negative operating cash flow. So now, in order to survive and finance their business, they're going to have to either issue debt or issue shares, okay? Apparently, they acquired something in the last quarter before these results come out. I don't know what it was, and honestly, I don't care. Negative free cash flow margin. Like, was this not obvious? Let's look at some of the ratios. PE. So this company that wasn't massively unprofitable, but it was unprofitable before the pandemic, has a PE of 27. Why? It's not growing that fast. Their revenues are declining. Why does this company have a PE of 27? 27 would make sense for like, I don't know, Apple, maybe like something that's growing at 20, 30% their revenues and their profits. That would make sense to me. But Corsair, that has declining revenues, massively declining revenues, 40% year over year, it looks like. Negative earnings, even on an adjusted EBITDA basis. Why does it have a freaking PE of 27? Price to books, 2.28. This company's hot freaking garbage. Like, I don't know what to say. Let's go ahead and look at the balance sheet, their most recent balance sheet. Okay, so they have total current assets of $626 million. But if you take out their inventory, which they're having a hard time liquidating, it's roughly $326 million. Okay, let's go look at their current liabilities. $384 million. What does that indicate to me? They might potentially have trouble paying their bills. What does that mean? They're going to have to get cash from somewhere. Where? issuing stock perhaps at a low stock price or going into debt. Okay, let's look at their long-term assets. So they have $692 million of long-term assets, the vast majority of which is either goodwill or intangibles. I expect it's probably goodwill. Okay, let's go look at their long-term liabilities. $323 million. So that's the thing. Another thing I don't like is they have $323 million of long-term debt, but their actual like tangible property is basically $20 million plus whatever these long-term assets are. Okay, so let's say $100 million roughly. That ain't that good. So it looks like they took some debt out to, finance maybe a purchase or, maybe buy some intangible assets. I don't know what it could be. This doesn't give me enough detail. Let's see. Okay, well, it looks like they're cutting their debt down. At least that's freaking good. So I don't know what there is to like about this company. I mean, I don't know. So let's go ahead and do a very, very basic model. All right, so we're going to use this trailing 12-month revenue. Revenue. And that's billion. So let me add some zeros here. Like I said, this thing isn't the end all be all. It's just a way to screen out like trash freaking stocks. Okay. Oh, to buy at $10. What is their shares outstanding? Diluted. I guess that's 95 million, I'm assuming. Okay. Oh, it's a let me double check that. Corsair shares outstanding. This is all you have to do. You can screen out stocks so easily. Yeah, they have 95 million shares outstanding. Okay. Discount rate. Let's say I want a 15% rate of return. Revenue growth assumption. Their revenues are declining. Let's be nice and say their revenue declines at 10% over the next 5 years. Well, we'll do negative 5%. You could get into more detail, but I'm not going to do that. Profit margin. They had very low margins. So if you go back, they were unprofitable before the pandemic. And during the pandemic, they had 5, 6, 7% margins. I'm going to be nice and give them 2% profit margin. Okay. PE at this position. This is not a quickly growing company, but we'll be nice. We'll give them a PE of $15. Share dilution. How much are they diluting shareholders? Let's see. Okay. So they were issuing a lot of shares, but as they run into trouble, it looks like they bought some back in this most recent quarter. Let's look at the annual. Oh my lordy. They issued shares like freaking crazy. We'll say 5%. So apparently, Corsair, assuming it's profitable, which it's not, would be a potential buy at $10.80. Okay. But of course, it's unprofitable. And here's where the model breaks down. You can't buy it. They would have to pay you to buy the company. So, no, I'm not buying this hot freaking trash, okay? And I'm being nice with this PE of 10. I mean, 15. Maybe we could do 10. This company is not good, okay? You need to sit this one out, in my opinion. You can do whatever you freaking want. But I'm not touching this hot freaking garbage. But, clowns, what they'll do is, they're going to have 20% revenue growth, and they're going to have profit margin of 7%, and they're going to have a PE of 27 like they do now, and, it's a $61 stock. But is 20% reasonable? Is a 7% profit margin reasonable? No. Actually, let's go look at their most recent profit margins on a quarterly basis. -1, 4, 0.45, 5, 8, 7. Okay. And remember, these were the quarters during the middle of the pandemic. These most recent quarters, I mean, they had a loss, and it looks like their loss is going to be a lot bigger this next upcoming quarter. It's like, holy freaking crap, man. So this is hot garbage, okay? Let's do some comments. Jeremy's facial expression is so untrustworthy. Buy his course, bro. Corsair's going to 2X from $41. I love how Lafufu stopped talking about Corsair and tattooed nutsack. Oh, if they ever go up, like let's say the market becomes clownish again, he'll start talking about it. Corsair, my pubic hair, absolutely sleeper of a company that isn't growing. It's garbage. It's hot freaking garbage. I mean, obviously, they benefited from the pandemic. They were unprofitable before the pandemic. They make good stuff, but I don't know how they're going to keep growing in that market. I mean, yeah, just because a company makes good products doesn't mean it's a buy. I mean, I shop at companies all the time that I'm not going to buy, like Walmart. I'm a shill of Walmart. Guess what? I'm not buying Walmart stock. A gaming rig with good peripherals cost me more than my first 2 cars combined. Too niche. Good Lord. What kind of cars are you buying? Do you know what makes me legitimately annoyed? How the heck does Lapupu still get like 50K views per video? Why would people still listen to him after his track record? Well, there's new blood that comes in, or, they're so fanatical about him because of Tesla. They really believe that all these stocks are going to, at some point, 10x, and you just have to wait and be patient. I mean, that's the message he preaches. You buy unprofitable, like highly speculative companies. You wait for them, you be patient. Yeah, sure, they'll crash. They'll be highly volatile. But at some point, just like Tesla, they'll have massive run-ups. Yeah. Can you do Snap? I already did. I'm doing Uber next. Majority of retail is effed. Corsair my horse. All right, guys, that's it. I'm going to do a video on Uber if I have time. I got to watch kids today. And let's see. Strongman, get ready for another self-clown thumbnail for the next Tesla quarter report. Okay. Well, I don't care. I'm not buying Tesla. I don't think most people listen to him. For most people, he is just entertaining to watch. Some also are hating to watch. I mean, like, he's not that entertaining. And, like, losing money is not entertaining. All right. Anyway, you guys have a wonderful day. QV out.
Holy smokers, folks.
Strongman personal finance.
Ain't no dang jokers. Alrighty, folks, big video. So in this video, I want to address the last time I was ever bullied in life. The last time I was ever bullied in life. The last time I was ever bullied in life. The last time I was ever bullied in life.
Howdy there, folks.
You're spending more of our money on those stocks. I'm gonna beat your ass. I'm gonna beat your ass.
Boy, did I get brutalized today.